Hello, my name is Troy Adkins, and I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a housing advisory services company. I want to talk to you today about the key events that have transpired in the U.S. residential housing market during the first quarter of 2024. During the first quarter of this year, the implications of the costly spread between a 30-year mortgage rate and the 10-year Treasury yield, as well as the monetary policy actions of the Federal Reserve to help curtail the impact of inflation on the U.S. economy, were the primary topics of conversation. This movie presentation also provides an overview of the home price level for a select group of cities that make up the Adkins 60 City Home Price Index, and it provides a wealth of information for prospective homebuyers to use in order to make a prudent home purchase decision. This presentation was written, narrated, edited, produced, and published by Troy Adkins. I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a privately owned and independently operated company. Our exclusive focus is on residential real estate. ACM is not affiliated with any parties associated with the residential housing industry. Our mission is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. As an investment professional, I have more than 20 years of real estate analysis experience, more than 10 years of institutional investment consulting experience, more than 8 years of freelance financial and investment writing experience, and more than 5 years of state government experience at the agency and legislative levels. I am also the author of more than 25 published financial and investment articles. Accordingly, I am a 2023 inductee into Marquis Who's Who. For more information about my background, skills, and experience, please visit the Adkins Capital Management website. For the first quarter of 2024, an overview of the implications of the costly spread between mortgage rates and Treasury rates provides some important information for prospective homebuyers to consider. As this chart illustrates, home loan interest rates remained elevated amid the unusually large spread between the 30-year mortgage rate and the 10-year Treasury yield. The large spread between the 30-year mortgage rate and the 10-year Treasury yield can have several implications for the housing market, the economy, and the financial markets. Here's what a wide spread could mean for home buyers. A wide spread often indicates that mortgage rates are higher relative to Treasury yields. This is because the spread reflects the risk premium that lenders demand over the risk-free Treasury securities. For home buyers, this translates to higher monthly mortgage payments and potentially higher total interest costs over the life of the loan. Higher mortgage rates can lead to increased borrowing costs, making home loans more expensive. As a result, some buyers may find that they need to adjust their home buying budget or look for less expensive properties. If mortgage rates are high due to a wide spread, it can dampen demand in the housing market. In a slower market, there might be less competition among buyers, which could be beneficial for those who are still able to purchase. For current homeowners looking to refinance, a wide spread means that refinancing options could be more expensive. This in turn may make refinancing less attractive or affordable. A wide spread can signal various economic conditions, such as increased credit risk or market volatility. Homebuyers should consider these broader economic factors, as they may influence long-term financial stability and housing market dynamics. Overall, a large spread between the 30-year mortgage rate and the 10-year Treasury yield can signal various economic and market conditions, from increased uncertainty and market risk aversion to changes in monetary policy and inflation expectations. With this overview of the mortgage treasury spread in mind, let me now turn your attention to our analysis of the Federal Reserve's monetary policy. The general theme of this section is that the Fed has set forth hawkish monetary policy via higher interest rates to curb inflation. During the first quarter of this year, the Federal Reserve continued to convey that it is primarily concerned about reducing rampant inflation levels in the U.S., but also stressed concern about its impact on the economy. Accordingly, the Federal Reserve maintained a target range for the federal funds rate that was set in July at 5.25% and 5.5% for the first quarter of 2024. The federal funds rate has not been at this high of a level since January 31st, 2001. In comparison, the Federal Reserve was holding the federal funds rate at around zero as recently as the first quarter of 2022. The Fed has raised rates 11 consecutive times since March of 2022. While calls for rate cuts are now a prevalent topic of debate, it is less likely to be cut significantly this year. The national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan reached an all-time low of 2.67% on December 17, 2020, and the all-time high of 18.63% in October of 1981. Due to a host of economic factors, the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan began the year at 6.61% and ended the quarter at 6.79%. With this overview of the Federal Reserve's monetary policy actions in mind, let me now explain the proprietary analytical methodology that was developed by Adkins Capital Management to analyze the home price level of the cities that constitute the Adkins 60 City Home Price Index. From a finance-based perspective, our proprietary analytical methodology determines the justified home price level for a city by taking into account household income levels, the percentage of household income allocated to servicing mortgage debt, and the cost of debt. For example, our methodology calculates the justified mortgage loan interest rate, which represents the cost of debt for a 30-year fully amortized fixed-rate mortgage loan that justifies the home price level of homes in the city with the household income level in the city. In addition, our software application calculates the justified percentage of household income amount, which represents the percentage of pre-tax household income that justifies the relationship between the price level of homes in the city and the cost of debt for a 30-year fully amortized fixed-rate mortgage loan. Based on Adkins Capital Management's proprietary home price level analytical methodology, this section of our presentation pertains to ACM's housing analyses. The general theme of this section is that the home price level in 51 cities that constitute the Adkins 60 City Home Price Index is overpriced. The 51 cities that make up the Adkins 60 City Home Price Index were classified as overpriced based upon their justified percentage of household income amount. Los Angeles, San Francisco, Newark, New York City, and Boston were identified as the 5 most overpriced cities in the index. In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities by reducing the 30-year fixed-rate mortgage loan interest rate from 6.79% to 0%. In addition, in terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities as underpriced, because prospective home buyers would have to spend more than the respective justified percentage of household income amounts, which fall within the unrealistic range of 81% to 99% of household income. Therefore, In order to justify the median home price level for each city, the median required household income level would need to increase to a level within the respective range of $132,713 and $393,949. Moreover, based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs of a mortgage loan, the justified home price level for the top 5 overpriced cities fell within the respective range of $147,944 and $426,404. Prospective homebuyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of overpricing of homes in their community. On the other side of the spectrum, based upon the justified percentage of household income amount, 9 cities in the Adkins 60 City Home Price Index were classified as underpriced for the first quarter of 2024. Detroit, Cleveland, Jackson, Des Moines, and Fargo were identified as the top 5 most underpriced cities in the index. In order to classify homes in the top 5 underpriced cities as overpriced, the national average mortgage loan interest rate would have to increase from 6.79% to more than the respective justified mortgage loan interest rate amount for each city, which fell within the range of 8.2% and 19.7%. Or it would have to be deemed imprudent by prospective homebuyers to spend as much as the respective justified percentage of household income amount for each city to repay the costs of a mortgage loan. Now that my quarterly housing market analysis is complete, here are some key takeaways. To conduct a similar housing analysis for your community or home purchase, you can subscribe to the Adkins Residential Home Valuation Analyzer on Amazon. Simply search for residential real estate software to find and subscribe. Visit the Adkins Capital Management website to review the home price levels in the Adkins 60 City Home Price Index, explore our interactive city housing analysis map, access our newsfeed with relevant housing information, learn more about our housing methodology patent application, or review our reverse mortgage loan analysis. You can also watch our movie catalog of quarterly residential housing market reviews or our housing valuation methodology presentation on the Adkins Capital Management website. You can also explore our strategic residential real estate hedge fund model portfolio. By visiting my website, you can gain valuable insights into the housing market and make well-informed home purchase decisions. This is Troy Adkins, saying thank you for taking the time to listen to this presentation.